This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today's 4/29/22, show number 386. Well, markets not doing too good today, Nick.
No, I got to say, Kerry, this was a very, very interesting trading week. If you look back at Monday, the market had a really, really good rebound from a major sell-off last Friday, which was April 22nd. And that rebound on Monday occurred on volume. And then we had a follow-through sell-off on Tuesday, a reversal back down on volume. Then we had a little bit of a weak session on Wednesday. Yesterday, the markets rallied up on very good volume. They even closed above Tuesday's high print, which is normally very bullish. And today, we got a very, very ugly sell-off. And I mean, this was the granddaddy of the week. The volume was 142 million shares by 4 o'clock. It's even a bit higher now. So it was just, today was a very, very ugly move with the Dow down over 900 points. The NASDAQ was down over 4% today. And, just a bloodbath out here across the board.
All right, so we got Apple earnings last night and Amazon. Apple's earnings were better than expected, but Amazon's not so much.
Yeah, Apple's earnings were better than expected. They really did well. And again, the stock rallied up initially after hours, and then it started to fade. Today, the stock finished down 3.6%. In all, Apple was up big yesterday, so it really wasn't a big move today, considering yesterday's big rally ahead of earnings going into the number. But Amazon was absolutely destroyed today. The stock was down over 14% by the close, a 406-point decline. Now, it is a stock trading around $2,500 a share. So, mind you, it is a really high-priced name. But this was just ugly across the board. Amazon actually closed below its weekly chart 200-day moving average today. It is sitting on its monthly chart 50 moving average. And I got to say, looking at this chart, I would expect this stock to go down and test a 2,200 level now.
Really? That low, huh?
That low. And that'll bring us back to where we were back in 2020, early 2020, during the COVID debacle.
Interesting. So it retraced the whole rally over the past year and a half, huh?
It retraced the whole rally from April of 2020, when the stock was trading at $2,000 a share. This stock topped out. Believe it or not, Amazon actually topped out in July of 2021 at around $37.73 a share, and today we're sitting at $24.85 a share. And I think we're going to see a move down to 2,100.
Wow. All right. Well, hey, that's pretty shocking. And that's a huge, huge decline. You can't, one of the bellwethers of the market, if Amazon's going down, then you got to believe everything else is going.
And that's what we saw today. Everything just got carried right with it. And it was just outright brutal. It was just brutal selling. There was not even an uptick to be found. There were some stocks that did defy gravity today, but for the most part, most stocks were just decimated.
All right, so here's a question for you. The Fed next week, everyone's waiting on the 50 basis point move. However, we got a print on the GDP yesterday down 1.44% for the first quarter, and now we're seeing the market meltdown. Any chance they're going to pull back on this, or will this perhaps be the last rate hike?
I don't see it as the last rate hike because they are so far behind the curve. So they're going to do the 50 basis points, the 50 basis point hike this coming Wednesday. And after that, I think they're going to continue to do 50-point hikes going forward until they get probably to where the 2-year Treasury note yield is. That's basically where they have to go. So the Fed funds rate right now, I mean, you could make a case is at 50 basis points. But these guys have a long way to go right now before they get that Fed funds rate all the way up to where it needs to be. So in my opinion, it's probably got to get to around 2.25. When they get the Fed funds rate there, that will satisfy everything, but they're not even close to that.
All right. Well, hey, I guess we're going to find out soon. And gold looks like it's starting to bounce back a little bit. Well, it's gone down, but yeah.
Yeah, gold had a decent day today. So, a little bit of a bounce early. It was okay. It was just up 5 points when it closed. It did rally earlier in the session, then pull back, back just shy of that 1900 level on gold futures. But not great action for gold this week, if you ask me. It wasn't, and even today, it was not a very good day for gold. I know it's the ultimate fear trade, but I think the market now is getting kind of used to this war in Russia and Ukraine. And as long as it stays there and it doesn't escalate or spill over into the European Union or anywhere outside of Ukraine, I think the market's okay with it. I do think the longer this war goes on, though, the worse it is for everybody.
Yeah, well, that's a given. Finally, Bitcoin's back under 39K.
Yeah, so Bitcoin today took it on the chin. It was, it's been holding that key level for a while. Today, it looks like it's trading at around 38,500 on spot. It's still living to fight another day, as we've been talking about. It's hanging in there. But for the most part, if you start to see this consolidate in this range, this is going lower. So, just be a little bit aware that the pattern is everything. Today was not good price action for Bitcoin. And if you start to see more consolidation, this is not going to be something that's going to hold up, especially in this kind of environment, this kind of market. Bitcoin is held by a lot of people that, are Robinhood type traders, that the hands there outside of the big mega whales that usually get involved, they're not really that strong. So you got to be a little bit careful when it comes to Bitcoin right now.
Yeah, well, recent news, Panama is going to allow Bitcoin to be held and no capital gains tax on it. And then a friend of mine told me that later on in the year, Fidelity is going to allow you, if you have a 401k plan, which they manage like millions and millions of people throughout the country, in your 401k, you'll be able to invest in Bitcoin.
Yeah, I was reading that and I saw that, and the timing of these the Panama news and the Fidelity news is pretty ironic. That makes me less bullish. So, when these guys come out with stuff like that, or Panama doing what they're doing, reminds me a little bit more stable than, I guess, the last country that did it, which was El Salvador. Yeah. So, I mean, the track record there don't speak too high. But, I just look at Bitcoin right now and, if it consolidates sideways, throw everything out the window, it'll go lower. Right now, it's still okay. It lives to fight another day. But it's really on the threshold of a potential breakdown.
All right. Well, that's it for today. Hey, go over to Nick's site, inthemoneystocks.com, see how he's consistently been beating the indices for decades now. The Twitter feed's at ITMS, at Nick Santiago01, and at Kerry Lutz. Your email is always welcome. Send it to me, kl@kerrylutz.com. Hey, if you like this podcast, why don't you share it with a friend, subscribe, like, share, subscribe, comment, and we'll talk on Monday, Nick.
Sounds good, Kerry.